They use our Q&A to
exactly.
reconnect
It's a dating site. It's SF Tinder, basically.
SF Tinder.
And again,
Bro.
yes.
Ciao guys, this is Mario Di Marco
And Alfio.
and welcome back to this new episode of SFT Forecast.
So today we'll start with the week recap.
Yep.
The other week, so last week we went a bit back on the market and we made some prediction. And what happened to those predictions? Let's start with the hot potato, which is gold.
Yes.
So Mario, what happened to gold in the last week?
Yep. Well, we spoke about this inversion towards $1970. Then the reaction that we were waiting for toward $2,000, and in the long term, we are expecting that the bullish scenario will continue on the precious metal. The reason behind...
So what's it saying is gold went up in the last week.
Yes.
Right. Okay.
Yes.
Gold went up in the last week.
Gold went
up and down, but it
yeah.
went up. Okay.
Yeah.
Okay.
Well, actually, the retracement was expected, and we commented about it during the episode. The gold spot was going up, and after a test of 90 area, we saw the retest of the moving average around 1,970 more or less, and then the reaction above those levels towards $2,000. And
we talked a bit about the correlation between gold and DXY last time. So what happened to DXY? Because we said gold went up. So DXY, we saw that it went down since last week. Was this expected? Is this correlated to something else that happened?
Well, yes. Let's say that the correlation that we noticed the last week is working. Is probably working with no obstacles during the process. DXY is going down. Started an inversion toward 102, 101 levels, back from an high point, an high level that was crucial, in my opinion, to understand, in order to understand the next move of the Federal Reserve. And we had the answer because during the week, a couple hints came to us from the Federal Reserve. We received several messages and several datas.
We had U.S. labor today. So it went, because in the last it went down, but in the last two days, Wednesday, you're gonna see this on Friday. Today it went up quite a lot. So it's maybe going up, like it went down a couple of days. It's maybe retracing up.
Yeah, it's a normal reaction if we consider the whole process, because after this bearish movement, a reaction and a retracement is expected. Is expected.
We were talking off camera before. There has been some movement in sense that the dollar has been abandoned a bit. So we saw gold going up and some decisions by the Fed that have influenced it. And so what happened exactly?
So the focus at the moment is about the interest rates cut in this case. And the market is starting to not the market, investors are starting to predict and expect that this new action from the Federal Reserve will be realistic in 2024, probably in March. So let's say that market is starting to price and is starting to discount this news, these hints, the sentiment where the US dollar is not I can explain, is not perceived like a safe haven asset at the moment. So investors are more conscious that the risk appetite could grow without problem, and maybe they should invest more in several assets with more risk, without the ghosts of the Federal Reserve behind.
Okay. So, and it's been not the most eventful week, so we didn't have a lot concerning Forex.
No, not that much. The only thing that we can notice is that maybe the Forex and currency pair reacted in a different way, even if positive, by the way. But gold got the biggest reaction against the dollar. And
we talked a bit, sorry if I interrupt, last week we talked a bit, we touched on the poor JPY, so the Japanese yen was experiencing a pretty long period of going not that great. And we talked that USD JPY was in constant raising, and it was going up and up and up. Since last week, it went down for the first time since.
Yes, as we know, USD JPY and JPY itself is experiencing a devaluation due to the Bank of Japan policy. So
I fought back a bit,
Yes, and there is a reason behind. I mean, there are a lot of hints, and a big sell-off actually on USD JPY. Driven the market and the investors the last week, also to the positive sentiment that we were talking about. So
the yen fought back.
The weakness of the US dollar could be justified also due to this reaction or this action in USD JPY, and when the Bank of Japan decide to act on the pair, we always see the effect also on the XY and the correlated market. That's why gold went up. That's why, for example, Treasury bonds, the 10 years went below 4.4%, and this is a factor that strictly influenced the buyers in gold, for example.
And so I think we haven't really talked about is US 30, which I know is a controversial topic because a lot of people who describe themselves as Forex trader
and then they trade US 30.
They trade US 30 a lot. And do you think that it has some I understand that some people think that US 30 has some correlation with the flow of the dollar, so the currency itself, and so it's tied a bit to the Forex world for that reason. But do you think that it follows the Forex market a bit, or is just tied to stocks performance?
Of course, this one. So let's say that is not correlated with the Forex as we know. Okay, so there is a correlation with dollar, of course, very very strict correlation with the economic data concerning United States economy, and rules that are comparable, technical rules. I mean, they are comparable with the pairs that we trade every day, but is a tool completely different than majors and pairs that we used to trade in Forex. There are several fundamental rules also that you can apply to index. So if you like to trade indices, you have to know rules that used to work only for index. And of course now we can see on the daily chart is very clear how the sentiment, the market investors in the daily charts is very clear how the sentiment
since the start of November has been on a bullish run.
Because since the start of November, the hints about the Federal Reserve are starting to increase. The economy contraction in United States is more concrete, is more relevant. and a lot of factors, and the XY correlation with treasury bonds. You know, stock market investors, if they don't move towards treasury bonds, most of the time they start to reinvest again on bonds and stocks. So,
and another currency.
Yes,
it's a bit tight as a definition, but no, let's talk.
Let's call it currency.
Let's talk about Bitcoin, because
a reality.
We talked briefly about Bitcoin, but this week it went crazy. So it went up and down. It's a lateral phase, so it didn't go up, didn't go down, went lateral, but it experienced some wild fluctuation of the price. And from this, I would go with what is happening with Binance. So can you explain a bit? So briefly, very shortly, what's happening with
let's
Binance?
Let's say that on a technical point of view, all the rumors behind the issues with the Binance CEO at the moment are driving this lateral moment. So there is a lateral moment on Bitcoin, and probably due to this situation, another thing that proves that Bitcoins is really influenced by external factor and not only from internal manipulation, as many people.
So for those who maybe don't know, the CEO of Binance pleaded guilty in an ongoing investigation with the US government, and is set to pay like 4 billion in fine for some money laundering stuff that it's not really clear. It's a really high level explanation, but this is what's happening. So Bitcoin is fluctuating and going lateral because of this. And but it's reflecting a bit in all the crypto market, and it's interesting because, as you said, Bitcoin is influenced by a lot of stuff externally. So it's maybe part, not I don't want to say of the forex market, but it's becoming less and less not a crypto, but less and less volatile and disconnected, and more connected to the rest of the market, as we know.
Well, volatility is still extremely high.
Yes,
on
Bitcoin. Of course.
But in my opinion, and this is what I said the last time, Bitcoin, just like the other currencies and cryptocurrencies, is starting to be involved from all external news and not just from a certain
that's what I meant
factors.
Was that usually like Bitcoins and all cryptocurrencies came to be because people wanted a decentralized, not connected to markets type of coins and of currencies. But what we are seeing now is that Bitcoin, which is the most important crypto, has been really slowly morphing into another asset of the market, and it behaves a bit like the market.
Are you trying to say ETF? You
no,
can do it. I mean, no.
Yes, thank you.
You can.
Very funny.
I mean, you can.
No, but
and I think you will in the future without problem.
Yes, but it's not where I was going. But more or less. So it's starting to go less and less towards its nature. So it was going to be decentralized, disconnected to the markets, and right now is slowly merging with the market and becoming a part of the market as well.
I'm not really expert about it. I'm as I said many times, I don't used to trade cryptos. It's not the approach that I have with this market. By the way, let's say that now I see that Bitcoin is starting to act as a financial tool very close to the ordinary ones.
Yeah.
So it's starting to be more technical. It was one of the questions from the Q&A that we had the last episode.
Exactly,
It's starting to be more technical. This conjunction at the moment on a technical basis was expected. Let's say that is due. Okay.
Mm-hmm.
And now we need to wait for a new bearish or a new pressure at the moment to see this new bull run that many investors are waiting for. And this is why I think that the news about the Binance CEO was not on the spotlight. I'm talking about for us. No?
Yes.
I mean, it was on the spotlight for us. There weren't any. There weren't.
Yeah, it wasn't a major news.
Yeah,
like it was
exactly.
a bit more discreet.
A lot of money, by the way.
Yes.
But
a lot of money.
Let's look, bro. Do you see the difference between the oil exchange that faced a lot of crisis during this year?
Yeah,
it was a terrible year for a lot of companies.
Yeah. Not us. We did great.
Crypto company, crypto exchange, you know.
Yeah.
So
was FTX in 2023 or
between last year and this year? So
yeah, it was start of I lost track
look
of
the
time.
reaction. I mean, for me, this means stability.
Yes.
The perception that I have is that this market is not unstable like the other ones. So now we need to change maybe our approach when we
should start to trade cryptos, right?
Maybe we should, but we should start to consider Bitcoin in a different way.
Okay.
Because institutional and governments, they're starting to evaluate Bitcoin in a more serious way.
You know that this deserves a Bitcoin. You know, what you said is scary. It's scary. It's controversial. But yes. And with these excursus about cryptos, we're going really, really fast into an ad break, and we will come back for the second part of the podcast.
Ciao guys, I'm Mario Di Marco. Black Friday has finally arrived. 60% off everything, guys. SFT, FastPass, Trade Pro, breakdowns. So don't miss it, guys. 60% off. Follow SFT, download the app, and see you there.
And we are back.
Back again,
and straight into the Q&A. So let's see all the questions that you guys have sent us. We have selected a few, and the first one is for you, Mario, which, because you're the trader here, why you don't trade using footprint?
What do you mean? No, I'm kidding. No, it's not my. I mean, they don't fit me.
Okay.
No, actually, the approach that I have, so with I don't know, Elliott waves and fundamental analysis, Joros, moving average or bars.
Yeah,
I use bars. I mean,
so for those who don't know,
black bars.
Footprints is referred to footprint charts, which are particular type of chart which is not very seen around. So,
well, I'm happy to see that there are people or traders that like to be unconventional. Because at the moment there is this trend where the trend at the moment is to learn just couple strategies, very famous, and I'm not a big fan of them, and you know, but my colleagues know too.
Yeah.
No, at the moment, no. It's something that I didn't look.
Okay. So no footprint.
No, I use
you can follow our footprints, but we do not trade with footprint.
No.
And this deserves a yes.
Yeah.
So next one, I mentioned the name because it's pretty particular. The Elliot Surge. He asked this last time, and he asked it again. So, is there ever gonna be a reunion with the Elliot Surge and Joel? And I've actually called Joel during the break to ask him, and he said yes, of course there will be. So Elliot Surge, if you are watching the podcast, yes, you will have a reunion with Joel.
They use our Q&A to
exactly.
Them.
It's a dating site. It's SF Tinder basically.
SF Tinder.
And again,
bro.
Yes. And also maybe thanks, because I come up with those.
It looks like a stand-up comedy podcast.
Yeah, exactly.
Yeah.
The
comedy.
The F in SFT stands for funny, and Swiss funny Tinder. And next question, and this is, we will come back to this, but what happened with OpenAI? And so for those who don't know and have lived under a rock for the past year, OpenAI is the company behind ChatGPT, and they are the biggest company, one of the biggest company in AI right now. And they had let's say pretty eventful weekend.
Yes, absolutely.
And it's not clear, like it started on Friday. Today is the 22nd, and it started on the 17th, so it's just a couple of days, and it's not even clear what happened. Long story short, but spoiler, next week we will have a special episode about AI and some other stuff, but about AI in particular. And so for the moment, what we can say is that the board of directors removed the CEO. It's like if we get rid of Mario here. And no, they removed the CEO, which is Sam Altman, and chaos ensued because OpenAI has been partially acquired by Microsoft. The board removed Sam Altman, citing some non-transparency by him, and the problem is that it backfired. They nominated a interim CEO, which was, by the way, on the board, and a lot of people of the company said, we are gonna quit if you don't reinstate the CEO. And the interim CEO said, yeah, we will bring him back. In the meantime, Microsoft acquired him and another pretty important guy at OpenAI. And so at the moment, Sam Altman is employed by Microsoft. But there is a but. Since the board was so naive to think that an interim CEO was good enough, but the interim CEO has said, okay, now we can try to bring him back, she got fired again. And so they replaced two CEOs with ex-CEO of Twitch, the streaming platform. And he came, and news of like today or yesterday night is that he came and he asked the board, what did Sam Altman do to get fired? And if he doesn't get an answer, he's gonna resign. And apparently like 700 out of 760 people that are employed at OpenAI said they were gonna quit as well. So this is still ongoing. We will not comment on it. It's a shit show.
We can say, absolutely. Yeah, and we can see that maybe this justify the performance of Microsoft in the stock market.
Yes, absolutely.
Next question.
But yeah, long story short, just to conclude, it's still ongoing. We will see what happens if Sam gets reinstated, if the board gets because the board of course has to go. But it's the biggest company in AI that basically shot themselves on the leg, on the leg, on the foot, in the head. I mean, they basically suicided, and it's been a wild ride. It's gonna be a wild ride. Next week we're gonna have this episode on AI, a special episode on AI. And going back to your questions, we had a question to which I think we have already answered. Is DXY going up soon? The answer is apparently not.
No, well, at the moment, there is a lot of pressure and the inversion is consolidating. There is a reaction right now, but in the long term, I see that the DXY will keep this direction on the downside, at least until it will reach psychological levels like 101, 100, due to all the hints that we received about the Federal Reserve. So and this week, anyway, is the Thanksgiving week, and the month is going to be closed. So.
And so for you who asked the question, if you have a long position on the XY and you're hoping it goes up again, just close it. Take the.
No, we're not saying this, but just be careful and pay attention, because the month is going to be over, and non-farm payroll on December are at the door. So maybe that week with the labor sector under the exam would be the crossroads for the DXY, and we will see if the market will keep this descent phase or a new inversion of short term is expected.
Yeah. And so other question is one of the most typical questions is, what kind of indicator do you use? We don't. Just kidding. So I let Mario answer
use
this.
Indicators. Just trade with the
draw some lines on the chart.
Some pen and a white sheet.
No, but
moving
averages,
several indicators. Yes, moving average,
RSI,
awesome oscillator,
and some other. Like it's a combination.
No, it's a combination. Yes,
you can have different types of markets. But the main ones that we have on the chart are usually some moving averages and one oscillator, depends on which, because the problem is that
depends from the market condition.
Yeah. And also if in the end, if you have too many indicators, it's counterproductive. If you have 33 moving averages, 3 oscillators,
let's say that if you know the function of every single oscillator or indicators, is not useless. Everything could be useful. In my opinion, in my experience, depends on the market condition. So if I know that I'm trading or waiting a new impulse, talking about Elliott waves, for example, I will keep my Avsom or Tom Joseph oscillator next to me, because I need the divergence to anticipate and to know when and where destruction is going to be complete in order to trade after the breakout. Yeah. So there are a lot of factors, and also fundamental analysis, news, data. They could be used as an indicator. Let's say DXY, treasury bonds. When we talk about correlations between tools, pairs, and gold, for example, with DXY, with treasury bonds.
It's basically an indicator.
Yes, we are using. Depends if you trade them or not, but we can use them, DXY, treasury bonds, and news data as indicators, because they are trying to tell us the condition of that market that we are strictly analyzing.
Trading during the news, yes or no?
Can I answer yes and no? I mean, yes.
No.
Okay. So my answer is yes. Just when and if I follow and compress the news in order to translate the news on a technical basis on a market, and if I find this correlation between news, so fundamental analysis, sentiment analysis, and technical, if I'm able to merge them and keep reading the condition, I will trade the news, because I know what I can expect.
I have a hot potato, really hot potato, which deserves a...
I hate this sound, guys. So you don't know how much I hate.
Hear me out. If the market is here and we are expecting a news, and so we expect high volatility, what if we hear me out? What if we place 2 orders, opposite orders, sell stop, buy stop?
Sure.
A bit detached from the current market price. So if we know, so for example, we know that the news come out at 2 p.m., for example. If we put
20:30, but it's okay.
Yeah, typical Mario Di Marco here. News come out at 2, okay? And the current rate is 1.0000, so it's 1-to-1. I don't know which pair, but it's 1-to-1. And we place a buy stop at 30 pips above, and sell stop at 30 pips below. And when the news hits, it's gonna spike. It's gonna enter one position. We erase the other, and we get profit. Is it doable?
Do I need to ask?
Yeah,
to
yes,
answer?
yes, please. It's an idea that I had. I just want to.
Based on the chart that you showed me, no, it's not profitable.
Why?
Because no. Why no?
Mario Di Marco, destroyer of dreams.
No, I mean, no. This is bro. It seems like that those Telegram groups where they're trying to teach trading.
It's a legitimate question. It's a legitimate question. Come on.
I knew about a conference in a hotel where mentors were teaching trading in this way. When price is here, you can do this, and this.
I was at the conference. No, just kidding. But
I
think it's doable. I will do it, and I will prove you wrong. But next question. Joking. Otherwise, we go somewhere we don't want to go.
We just remember, guys, that we use the SFT forecast. Just to speak about trading, and
it's a joke, but it's
just
not
in a friendly way with a friendly tone. So
next question. This is probably the last question, but it's interesting. We get a lot of questions of how do I start if I'm a beginner, and prop firms are everywhere these days, and so there's this, I think, misconceptions that a prop firm is good for a beginner. Like, the question is, prop firm or demo account for a beginner? I don't think a prop should be considered for a beginner, because it's still like, if you don't have experience, you're still gonna burn an account, or like it's prop is, in the end, it's real money. Like you can get paid,
yes,
but you can also waste a lot of money on props. If you start on a demo account, you get experience. You don't get profit if you do well, but on the other side, you don't get.
Well, the negative side, in my opinion, is not only linked with the result, that you can achieve with the prop firms, funded or not funded. Is the negativity that you can get from that, in my opinion. Try to imagine you're starting to approach the trading experience, for the first time, and then you start with a bad sequence of negative results due to a challenge with really strict rules. I mean, they're very hard, but because they're made to let traders fail.
Yeah, 96% of traders
is very high.
Fail.
So let's say,
even if you get access to a real account like Insta-funded, or we offer a service to pass challenges, so you get someone who sells funded accounts.
One of our service is FastPass. So we I don't want to go on marketing. I know this is not a commercial.
But so you can get access to a full account, a funded account, even without being a profitable trader.
We can pass your challenge and etc. But
so a beginner comes here, I have this amount of money, I'm gonna buy the challenge, I'm gonna buy the service from SFT, they're gonna pass me, and I have a 100K account. He's gonna blow it.
Yes, if the approach to this opportunity is built in the wrong way. If we want to keep the funded account that we can pass to him, just in order to bet if.
But how will it not lose the account? Somebody with zero experience.
Bro, is a combination between investments of money, buying a funded account, and investment of money, trying to educate.
Yes, okay, but
so educational side.
You agree that you should start on a demo account.
In
your opinion?
In my opinion, a beginner should start with a demo account.
Okay.
Then, thanks God, there is the opportunity to get the access to a couple of funded accounts.
Yes.
That can provide you capitals if you're lucky at the beginning. I properly say lucky, because at the beginning, in my opinion, in my experience, I could be wrong. It's just a matter of luck.
Yes.
In my opinion.
And so better to test luck on a prop firm than.
If you have enough money.
I'm sorry.
Yeah, on a demo account.
On a demo account, yes.
But, however, if you have enough money to afford a funded account, okay, and at the same time to provide yourself the proper education, I will invest 50% on 70% on educational courses and all the process, and then also and the rest on funded account.
Okay. And
For
by
me,
the way,
just to close, I'm sorry. There is this confusion between the process and the results. In the past, I don't want to say that now is totally different, but there is this problem. People want to achieve their own goals quickly, fast. They see the funded account, the prop firms as the fastest way.
The trading gurus.
And this is the slogan that many commercials use. The fastest way to get funded,
Yeah, you get funded and it's fast, yes. But then what do you do afterwards?
Exactly. So be patient, I say.
Yeah.
And never forget that the educational process
is long.
And is mandatory. It's something that you need, that you have to do.
I've been a part of SFT for more than 1 year right now, like 1 year and a half, more or less. And being next to professionals and people who do this every day, the whole day, I'm starting since years. I'm starting right now after 1 year and a half of constant knowledge being taught to me. I'm starting right now to understand some principles, and I still have those moments of realization of so I thought this was right, but this is actually wrong because blah blah blah. And so if after 1 year and a half of being next to professionals and absorbing the most that I cannot imagine somebody that starts because he has seen some guy on Instagram getting rich, and he starts from zero, and because those courses, they try to teach you some stuff, and that's fine, but they lead you to believe that they teach you everything.
Yeah.
And also people, for example, who started investing in stocks in half 2020, 2021, the market went on a bull run. Everybody seemed like a genius. Yeah.
Let's buy Tesla stocks.
I put 1,000. I have 3,000. I'm the new Warren Buffett. No, you're the new lucky guy. And when everybody crashed, like everything crashed, the market crashed. A lot of people, oh no, but I was profitable. No, you were lucky. It's different. And so, spoiler, we're gonna have some courses as well.
Yes,
soon.
Of course.
But we will be clear that it's not education it's not 1 year, 2 months, 2 years of education and then you stop, right? It's an ongoing process.
Never stop.
Like you need a base of education, you need a base of knowledge to start learning.
Yeah.
Like you need to be able to walk to learn how to run. So, and it's not that you learn walking and then you run. You learn walking and then you learn running. So maybe it's clear, the analogy. But yeah, so to sum it up, for a beginner, the best thing to do is trade a lot to get some experience, and the best way to do it is probably on a demo account.
Yes. But if you want to start on a funded account or a challenge,
just don't trade gold, he said it last time.
No, just keep in mind that don't take as negative the result that you have, because the process is harder than an educative process.
Also psychologically, I think that a demo account is
that's
better. Because you lost what? A demo account. Click, another demo account.
Yeah.
And so you can feel rich, 1 million demo account, let's go.
But if you spend money for a funded account
and then you lose
it, then you lose it.
You lost money.
You have several negativity points.
Yeah.
So one from the experience, because you lost money, and one from the results connected with your performance, with your know-how, and with the knowledge that you are taking step by step.
So if you're a beginner out there, do not buy a funded account initially. Buy a course, buy some educational material, learn how to trade on a demo account.
You should start from something like that.
And then when you feel a bit confident and maybe you got some profits on a demo account, you got a good strategy, you feel confident, then you smash your head against the wall on a prop or a challenge or a funded account, and then you never stop learning, right?
After 13 years, I think I'm still studying.
And I think that with this, we can close this episode.
Yes.
Next week, as said, we're going to have a special episode more about AI. And yes, it's been...
An expert advisor.
Yes, yeah.
How and if they work.
yeah, about the bots and AI bot coding in general. It's going to be a fun episode. So... see you guys next.
I already have the Q&A, bro.
I'm scared.
Is expert advisor profitable? For real?
I'm scared, but yes. So that's been it. See you guys in the next episode. Ciao, guys.
Ciao, guys.